What is going on, guys, and welcome to today's video. Super excited to do this one. We're going to be talking about M1 Finance. As you guys can see, if you guys watched the last video I uploaded about a week ago, the protein review, I mentioned I was going to start talking about investing stuff. This is something I have been doing a lot of research the last 2 months or so. I mean, more than that, but just a lot of research in the last 2 months. I am by no means an expert. I wouldn't say complete beginner, but I am definitely a beginner, and I'm just learning, which brings me to my point. I am not a financial advisor. Everything you guys see is for entertainment purposes only. With that said, we're going to crack open this nice V8 Energy. I think this is my second one today. These are pretty good. What I like about these, real quick off topic, 50 calories. It's got like 90 milligrams of caffeine, somewhere 80 milligrams. Smash that like button, subscribe, and hit the bell for notifications, guys. That way you don't miss a video. So I'm planning on doing a video, an update of my portfolio. As you can see, we're about $2,000, just under $2,000, and I've been, just to show where I've been funding it. Oh, well, I've been funding it since September 16th, so about 2 months, and I've been, I've been aggressively funding it, as you can see. But I plan on doing an update with this portfolio probably once a week. We'll kind of see how it goes. Maybe every 2 weeks. So I have been using Robinhood and Acorns as well, so I will be doing videos on those. I do love M1 Finance. Oh boy, do I love this this platform. It is amazing. So with that said, if you guys do want to sign up for M1, there is a link in the description where I believe they have let me see, they have a referral where you guys sign up, you get $10 and I get $10. So that'll help support me. It'll help support you guys getting started on your portfolio with essentially a free $10. I don't even think you have to put X amount of money in. I'm not completely sure, but I think you might have to fund $100 or something. I'm not sure. I will also have a link to this portfolio where you guys can see all my holdings and my allocations and everything. That, if you guys want to see all that, that's going to be in the description as well. Okay, so yeah, we're just under $2,000 right now in about 2 months. You guys can see the money. I labeled this, my portfolio, the money tree, and I thought that was kind of cool. I've seen some people do like just passive income or whatever, but money tree, because essentially with dividend growth investing, we're actually gonna, let's just take a look at the the definition here. If we just type in, this is the first thing that pops up, and I feel like this is fairly accurate. A dividend growth investment strategy is the act of investing for dividend income and capital appreciation. It's more so focused on dividend income. Capital appreciation should theoretically come with it, but we're focusing on the dividend income. So the goal is to seek out businesses that have a strong track record of rewarding shareholders through dividend payments, like what that says right there. So everything, guys, in this portfolio, every single holding, let's look at the holding page. All of these holdings you guys see, whether it's an ETF, I do have some ETFs, or individual stock companies, they all pay a dividend. Every single one of these. Which is the point of a dividend growth portfolio. I used to have some companies. I used to have Amazon and Tesla when I first started this portfolio about 2 months ago, just for like a growth, because they're more growth oriented and they don't pay a dividend. But I got rid of them because like I solely just want to focus on this portfolio for dividend growth. That's all this is. I will never buy a company in this portfolio that does not pay a dividend. The concept of the money tree is essentially we are growing a tree that over time will, as the tree keeps growing, it's going to produce money. Hypothetically here, obviously, but, so the tree keeps growing over time. Instead of the tree producing fruit, like apples or something, it's going to produce me money. So I thought that was kind of a cool concept. I don't know, but as you guys can see, the portfolio itself is actually doing pretty well. In the 2 months that we've started, actually, that's kind of funny because I'm filming this on November 16th, and it's been exactly 2 months. I honestly did not plan that, but it's been 2 months. We're at almost 2,000. So we're up about $156.75. And that is the gains. So that combines the earned dividends, which you guys can see I've earned $3.41, and then the market gains as well. I will say, so like I said, the earned dividends is the priority here. This is the number one priority. Earned dividends. Market gain is number two. I mean, we do want the portfolio to go up, obviously, but we are focusing on blue chip companies. So a blue chip stock is a well-established company that has a proven history of, growing, that's been around for 50, 100 years, that's been around for a while. Like think of Johnson & Johnson, 3M, and these companies typically pay a dividend. So they're not like newer companies like Amazon or Tesla. These companies, blue chip companies, you'll see a lot of these are, let's just pick out a consumer. The Disney, Costco, you see these companies have been around for a long time, 50, 100 years, so they have a proven history of improving the performance of the company and typically have a dividend. So that's what we're focusing on. I will go through all of my slices kind of quickly. I don't want this video to be too long. It will be a longer video than I typically do, but I just kind of want to go over all these in a little bit, and then I just want to go over the M1 particular, the platform itself. So what I like about M1 Finance, guys, is it's not like your typical broker like Vanguard or Robinhood. I mean, there's so many brokers out there, but this one's a little bit different, and this is my favorite for dividend growth investing. So you only have one trade window. You'll see here the next trade window is at 8:30 in the morning. The stock market actually just closed right now, or 2 minutes ago. It's 3 o'clock where I live, and so if I wanted to put some money in and buy some stocks tomorrow, it would go through in the morning. But say if it was like 2 o'clock, I would only have, like with Robinhood, that's something I like about Robinhood, is you can buy stocks whenever. But with M1, it's not a big deal because I'm really only focusing on dividend companies and I'm not like day trading. So M1 Finance, guys, is not for day traders. It's not for people that you're buying low and then you're selling high maybe the same day, or it's not for stuff like that. It's for buy and hold, more so long term, at least a few years. So if you guys are day trading, this is not the platform for you. In my personal opinion, I think M1 is the best for dividend growth investing, which is what this is, and that's what I'm doing. I do want to give a few shout outs to two other YouTubers I've learned quite a bit, and I love their content. One is Joseph Carlson, and then the other is Jake from Dividend Growth Investing. Both these guys have really good channels and provide a lot of great information. They both have huge portfolios, and I guess I'll throw their link to their channels so you guys can learn from them too if you want, below as well. So but yeah, shout out to those guys. There's other channels I've been watching, but those guys have been doing M1 Finance for I think a few years, and they have 100K plus portfolios. The trade window, you can only trade once a day, and that's in the morning. This one opens up, I think you honestly have to have $25,000 to have this second afternoon trade window, because you guys will see I am an M1 Plus member, and I think I got a good deal. I think I signed up for like $25. I think it's normally like $100. Membership details. So yeah, I'll go over all this stuff actually right now. But so you guys can see M1 Plus, you get spend. So you get, right now, I think all this stuff changes, but I actually have to activate my card still. And so you get an APY of 1% and cashback rate of 1%. So anything I spend with my M1 card, which I have right here and I completely forgot to activate, is this bad boy. You get 1% cash back, which is pretty nice. And then you also get 1% interest. Like I said, I think these rates do change. And then it looks like they have a holiday special, which I haven't really looked into too much. Shop for your loved ones and get 5% cash back at retailers, which actually looks really nice. 5% cash back is pretty nice, guys. And then the borrow feature, I don't know if I'll probably eventually try this out. You have to have $10,000 invested. And you can borrow up to 35% of your portfolio's value, and it's really low, 2%. I think you have this without M1 Plus. I think it's 3.5%. And again, I imagine these rates do change. So say you have $10,000 invested, you'll be able to use this, and you can borrow, which is known as using margin. Sorry about that. Which is so I could borrow $3,500 if I have this much, and I will have a 2% interest rate, which is actually really low. So we'll see about that. Research, the research tab. So they do have some good articles. I will show you guys 2 websites I like to use as well. But if we were just to look up like a stock, you can either type in the ticker symbol or just the actual stock itself. So Apple, it'll show you some analytics and stuff. Like the dividend yield, which is obviously very important because that's what we're focusing on. Even though Apple does have a low dividend yield, I'm still, they have been increasing their dividend, and they're just a good company to own in general. Everyone knows about Apple, and then the market cap, and then it gives you a little summary. We are going to go over the holdings in 1 second. I just want to go over so you guys can see. If we go to this is all. So this is the last 2 months, and you guys can see the money I've been adding in. Like this day, I think it was I added in like $600 between a day or two or something. That's why it jumped up like that. But yeah, we're up 160, and then almost a 20% return. This is money weighted, which is a little bit different than your typical return. I'm not really good at explaining money weighted. I just learned about it, but I prefer it. It's more accurate to me because it factors in the amount of money that you put into your portfolio as well. So, but yeah, I mean, the portfolio itself is doing pretty good. If you guys, and then over here you can see, if we go to like the day, the data hasn't been able to display because the market just closed, I believe. That's why it's not showing anything. But yeah, this portfolio, we were up almost $28 today, and then that's 1.5%. So that is pretty good, actually. The week, 54. You guys can see the month, the quarter, the year, 150, 160, and then this is going to be the same because I have not been investing that long. So rebalance. We're not actually going to do this, obviously, but I would not recommend doing this. You can learn more about it, but it'll buy the underweight holdings, and it'll sell the overweight slices to get to your target allocation. So you guys can see here, I actually just made some adjustments to this the other day, yesterday. This used to be at 35%. So you can see actual and target. So the first number on top here is the actual number, and then the below is the target. So whenever you put money in, which is it'll display right here is your cash balance. I have $5.68. Whenever you put this money in, or deposit from your bank anyway, it'll try to allocate it to the specific percentage. So you can see this is 0.6% underweight. So it's going to be I just adjusted my technology, and I went from 13, I had it at 13% like the consumer to 18%. So next time I deposit money, it's going to try to put more money into technology, and since this is overweight by roughly 3%, my main ETFs, it's not going to put money in there. So it's very that's what the whole pie system is. As you guys can see, if you hover over this, it shows each slice, and it's very, very cool. I love this platform, which is the pie system right here, and it'll tell you underweight, overweight. But so the cash balance, like I said, for the auto invest right here, you can either turn this on or turn this off. I recommend, I mean, it depends on what you want to do, but I usually have mine on. But they keep changing it, so you have to have $25 for it to auto invest cash into your portfolio. I think it used to be like 15 or 10, and they just kept increasing it, I believe. But I keep mine on. So once this gets higher than $25, it'll auto invest this all into my portfolio. And then, like I said, it's percentage, it tries to hit the target. But you guys can see, which is nice, because I have mine divided into sectors, essentially. And then do we have this? Okay. So my main ETFs were up $51.19. So we'll get into the holdings real quick. So I just made some adjustments the other day. My holdings are VTI, VYM, SPHD, and then this is the new one I just added, SCHD. And then you guys can see the target percentage right here, 35, 35, 15, 15. So this does obviously have to equal 100. And this is my main ETF. So you guys can see about almost 1/3 of my portfolio is main ETFs. I used to have it higher, but now I've been lowering it down so I can have actual individual stocks as like more of a higher percentage points. So VTI essentially tracks the S&P 500 for the most part. It actually has where is it? Yeah, 3,500 companies. But I think the main bulk of it is the S&P 500. So more or less, this does track the S&P 500. So if that's going up, this will go up as well. VYM, a good dividend ETF. You guys can see the yield right here. ETFs will have an expense ratio, which 0.06 is pretty low. And then SPHD, SCHD. This one does pay monthly, which is nice. The growth isn't as good as like these other ones, but it does pay monthly. So, and I do have it as a smaller allocation. So, okay, that's the main ETFs, which again makes up about 1/3 almost of my portfolio. And then I just increased technology. So again, we have an ETF VGT, which has a lot of this owns like Square. How many companies does this have actually? 332. So quite a bit of companies in VGT. I don't want to go into detail. I'm just going to kind of show you guys which companies I have. Maybe talk a little bit about some of them. Microsoft, Apple, Activision, Blizzard. I did get Activision because the company's actually have been doing pretty well. They do actually pay a dividend once a year, I believe. I think it's once or twice a year. I think it's once a year though. Like I play WoW and stuff, so I do like this company, and they've been growing. So I did want to get a little bit of exposure to them, and then Visa. So 5 into the tech field. Consumer. So I just combined both consumer sectors into one. So we have Disney, Costco, McDonald's, Target, Home Depot, Pepsi, Coke, Kimberly-Clark, and Procter & Gamble. All right, so yeah, I used to have 10 companies in the consumer. Altria Group was the one I sold yesterday, but they've been just going downhill, and that's they manufacture and sell cigarettes in the U.S. So it's like I think the biggest company, and it's not for like ethical reasons or anything. They've been going like I'm looking for companies that capital gains are going up, obviously, and they've been just going downhill. And actually, smoking has been decreasing in the U.S. So I sold them yesterday. Although they did, as you guys can see, they have a huge dividend yield of 8.38%, which is actually pretty high. But it's to me, it's not worth it if they're just going down. Back to consumer. So yeah, I lowered the target percentage for Kimberly-Clark and Procter & Gamble to 5, and then I have Disney and Costco at 15. These are all, I believe, great companies in my opinion. And then let's go to real estate. We have FRT, Store Capital, Iron Mountain, Realty Income Corp. So Iron Mountain, this might be something I get rid of soon. And again, guys, I don't have like a huge portfolio or anything, but with all the research I've been doing, all these companies are companies I plan on holding essentially forever, unless they cut their dividend or their business model is declining. And Iron Mountain, they've been also going downhill because they have like a data, like physical storage, and I think they've been trying to transition to data storage, but so we're keeping an eye on this company, and we're going to see how they end up doing. But you guys can see in the year they're down. They've been down quite a bit. They do have a high dividend yield, very high, actually almost 10%. But if the company keeps declining, it's not worth it. So, but this is the real estate. So like I said, we're going to keep a close eye on that one. We go into energy. Again, energy is another one that's been declining. Chevron, Exxon Mobil, MMP, EPD. If I click on Enterprise Products Partners, their dividend yield's 9.6. But yeah, these companies, they've still been again declining. So I mean, we'll see. I might just get rid of the energy sector in general, but we'll just kind of see how that goes. But yeah, energy sector, I'm keeping an eye on that one. Utilities, NextEra Energy, Duke Energy Corp. These are both great companies in my opinion, especially NextEra. And you guys can see the dividend yield, 1.77. So you can't just look at, there's a lot more factors that are involved besides the dividend yield. You got to actually look at like the balance sheet and how the company itself is doing. But actually just, yeah, learning about the company. So they've been looking into clean renewable sources, including wind and solar, which is essentially the future, especially, I mean, the way, that's why, clean and renewable energy. You're looking at like the cars, like EV. I mean, everything's going EV. That's like that's the future, So you want to invest in companies that are going to do, especially with dividends, you want to invest in companies that are going to be around for 5, 10, 20 years, that are going to be doing well, Telecom, we have AT&T and Verizon Communications, 75% AT&T, then 25% Verizon. I might end up changing this to 50-50. AT&T has been going down as well, but we will see. They pay a good dividend. What's their dividend right now? 7.19. Verizon's is a solid 4. But yeah, so those are two solid companies. Financials, Vanguard Financial Index Fund, and then JPM. Both of those are pretty solid. Industrials, UPS, 3M, Caterpillar, Waste Management. Waste Management is a great one. This is one that's not going anywhere because everyone produces garbage. No matter if the economy is good or bad, no matter what situation, there's always going to be garbage. So, I mean, I feel like this is a company you just essentially buy and hold forever. Healthcare, Johnson & Johnson, Pfizer, and AbbVie. I just have these at a roughly 1/3 split. And then materials. I don't know too much about materials, honestly. So I was thinking about just getting rid of these 3 and getting like an ETF, like a Vanguard material ETF, which I was looking at the other day. but we'll see. What I want to do is cut down on my holdings. You guys can see I have 41 holdings right here, and that does include the ETFs as well, but I want to cut it down to maybe 30, 35. So then you guys can see the unrealized gains, 147, 8.5%. But yeah, this just keeps track of everything. So it's M1 Finance has a really nice, they're adding more tools and functionality to their website. The app is really good. I look on the app every day, you know, and check out how the portfolio is doing. And so this is the activity page, guys. So dividends, if we go to dividends only, you guys can see all my dividend payments. And again, we're just getting started. It's only cents. But eventually this will be, you know, this one, for example, this 9 cents will turn into, you know, $1, which turns into $10, and eventually $100 dividend payment. You know, so all this is going to go up over time. But it's just nice. These are companies that are paying me for owning their shares. FRT, Realty O. Oh, Realty O gave me 2 payments. I think, does Realty O pay monthly? I think they do. Yeah, they must. AT&T, JP Morgan, Solensi, I'm pretty sure I'm not saying that right, Apple, and Maligan Midstream Partners, which is like the pipeline company that has a high dividend. So you guys can see these are companies that are just paying me for owning their shares, which is essentially the most, in my mind, I think it's the purest form of passive income out there. And then, yeah, it's really nice. You can just track everything. Go to reset. It shows this morning, 20 buys, 1 sell. I think if you click on it, yeah, it'll show you what I bought. So there's 20 buys. This is the company, like I said earlier, that I sold, Altria, and then I bought all these companies. So it's pretty cool. I love this. I love the functionality of everything. Like I said, M1 keeps updating their website and interface. I'm not affiliated with them. I just love their product. All right, guys. So I know this video is getting kind of long, so I want to wrap it up. I do want to show you 2 websites I like to use, and then just kind of conclude the video here. But so this is Seeking Alpha. They have a lot of good free information. You can like upgrade to like the pro. I don't think it's worth it, in my opinion. But like, so I just have Apple up here right now, and you guys can see like it shows you a lot of the data, the EPS, the 52-week range, the dividend rate, yield, like all this stuff. And then what I like to look at is if you go to click on dividends here, it'll show you the yield percentage, the payout ratio, 5-year growth rate, and then the dividend growth, like how many years, and then you can even look at like the dividend history of the company, dividend growth. So it's this, you want to see these bars going up in this kind of general direction. But Seeking Alpha, that's a good one. I suggest you guys check that one out if you are unfamiliar with it, as well as the Motley Fool. Again, just good information to look at and read about the different stocks. All right, I hope you guys enjoyed this video. I know it's a bit long. I try to go over a decent amount because this is the first time I was kind of just showing you the M1 Finance website itself, and then just going over my portfolio and all that stuff. So hopefully you guys found some useful information. Again, I'm a beginner at this, so I am just showing you guys what I'm doing, and it's definitely like it's the start of the journey, so I'm really excited. Please give the video guys a like if you enjoyed it. If you guys want to see another video like this, the next one should not be it won't be as long as this one, because I don't have to go over everything again. I will just be updating my portfolio, like I said, planning on like every week or two. And then I do want to go over some Robinhood and Acorns with you guys as well. But you can see the portfolio almost 2,000. We're doing pretty good. I'm very happy with how things are going. I'm very happy with this website. M1 Finance is awesome. But I will see you guys in the next video.